Good morning, everyone. My name is Amit Jain, and I'm the partner, and I head IBS Intelligence, and I'll be your moderator for the next 30, 40 minutes on this panel on next-gen transaction banking, right? While the logistics are being set up here, I think one thing that stayed with me was, when Mr. Vikram Tandon said about asking Alexa about, does your spouse love you? I just hope that there's no OTP that's being sent to either one of us, right? So I think if we can evade that process, that'll be slightly more useful, right? So while the setup is done, can I now start to welcome some of my guests? First up is Indu Anand, Head Transaction Banking Implementation at Nucleus Software. Welcome, Indu. Then I have Aman Singla, Head Transaction Banking Group at CSB Bank. Welcome, Aman. Can I have Varun Bakshi, Head Product Transaction Banking at RBL Bank? Tarandeep Singh Lamba, Head Trade Products Transaction Banking India at Standard Chartered Bank. Welcome, Taran. Can I request Nitin Gupta, Head Global Transaction Banking, Corporate and Institutional Banking at QNB India. Transaction banking is a pretty vast topic, right? So I think that's reflective also in we are covering payments, collections, cash management, liquidity, as well as trade finance, right? So we're trying to do justice to the topic. We have hopefully representatives from each part of it, right? So Varun, to start with you, how is the role of transaction banking evolving, right? So as the SMEs now, and the corporates are demanding things faster, real time, as of yesterday. So how do you think is the role of transaction banking now evolving?
See, transaction banking has evolved a lot over the last 2 decades plus that we've been working in this space. What started as efficiency for managing paper has now transformed into giving instant gratification. Today, the wholesale world, which is where transaction banking traditionally used to be more prominent, is slowly asking us to go deeper and deeper into their value chain. And the line between wholesale, retail has started blurring. The challenge has been like corporates. Corporates are looking for the same parameters that were brought up for banks: greater efficiencies, bringing down cost-to-income ratios. At the same time, their value chains are not that ready to evolve and adopt as a generational shift is still underway. Most of the people in the value chain, the SMEs, in India on the manufacturing side, was started by a generation which understood banking by going to the branch. The next generation is now taking over, and they are, as someone said, probably not as middle-aged as most of the people here, and they are demanding and are open to looking at solutions where there is digital adoption, there is faster communication, and faster onboarding. I think onboarding, access to credit, is blending into the traditional transaction banking field of just offering faster and more efficient management of your payments, collections, liquidity, or solutions for cross-border finance.
So, Aman, my question to you, as Varun said that lines up, as Varun also mentioned about lines being blurring and the need changing of corporates and SMEs, right? So, I mean, if I look at what product areas, right, whether it is cash, trade, supply chain finance, are there areas that require urgent attention, or are all of them broken, are all important, or all need to be, is there a priority?
Good morning, everyone. So, Amit, I think I'll just take a step back and set the context on, how transaction banking has evolved over a bit of last 5 years or so. It was always there in the banks, but it was not a transaction banking portfolio. It was always cash separate, trade separate, supply chain separate, right? If you see post-COVID or nearabouts, the evolution of transaction banking or the banking landscape happened where the rapid innovation came into the picture, right, which led to payments, influx of payments, trade digitization started happening, supply chain platforms started coming up. The innovation happened, and it was also, to an extent, complemented by internal modernization of the bank's legacy systems, which is still a work in progress. I think so that is still continuing, and because of this entire changing financial landscape, what has happened is it was driven primarily by the environment being complex, volatile, because your FX volatility was there, your interest rates were changing, supply chain disruptions happened, which we saw in COVID, post-COVID, and then in Ukraine-Russia war, and then with tariffs coming along. So a lot of these things have come along, and the only thing which people have to be constantly reminded of is uncertainty now, right? And as a result of that, transaction banking has to also evolve and keep that into mind when we look at. So it's transaction banking, nothing but it's all about money movement. It's all about payables and receivables, right? So I think I won't say everything is broken or everything is perfect, but there's a lot of work happening on that side, and will continue to happen. It is a work in progress on that side. A lot of payment rails have come up, which people started using very well. Cross-border payments have become a very important way of doing business because people now look at speed, trust, low cost of doing business, and plus supply chain is obviously again ensuring that the working capital is being made available to the customers, which is not only instant and easily available, but also at a very cost-effective way of doing business, right? Corporates, the entire corporate way of looking at business has changed. Their entire debt profiling has changed. They are moving from normal working capital term loans to trade finance-led kind of working capital loans, right, which are cost-effective, which is also helps them, and it also helps the banks because it is short-term in nature, self-liquidating, it's early warning signal, so it is a win-win for both, right? So I think that is happening, and as a result of that, banks and to a large extent, fintechs, as somebody mentioned in the early panel, collaboration has to happen. We have to partner with a lot of people to take care of that. We'll have to come together and ensure that all these issues are worked together, and the go-to-market is a lot more quicker. So I think that's the way it is.
So, Nitin, on to you, but picking up from what Aman said, that it seems like it is evolving and it's going to be a win-win for both the SME corporate and for the bank, right? Because there are evolving needs, and even the banks are now doing to streamline some products around transaction banking, right? So how do you think banks can strengthen the value proposition of these corporates or SMEs, right, through whether it's a digital transaction banking, next-gen transaction banking? So what's the role banks can do to strengthen the value prop?
Sure. Thank you, Amit. So before I come to that, just wanted to draw the attention of the audience why the transaction banking or trade is so critical, so important, and why we are having this kind of a threadbare or deep dive kind of discussion. To bring the context to what the Honorable RBI Governor said yesterday in one of the forum, when he was addressing about the recent data which got published on the current account deficit. One of the prominent reasons which he highlighted, which he pointed out, the reason for the current account deficit number being that much is the imbalance in the trade flows. Now, when we start talking about trade flows, there can be many parameters, many factors, domestically, globally, which may impact trade flows, like Aman said, right from the time of pandemic or global wars, or some big geographies have started using tariff as the tool of the power. So there can be many parameters, but end of the day, the impact is coming on trade. Now, with the trade kind of a discussion, we talk about the transaction banking. Transaction banking, like Aman also briefed, is a part of the banking vertical, but then end of the day, it is the receivable or payable or a financing attached to it for any corporate or a SME. Now, I come to the question. So how banks can support the end customer, whether it is a corporate or a SME, is rightfully sort of digitizing the value chain, the touch points which a bank can have or normally has with those kind of entities. So right from the beginning, where we start our handshake with those companies at the onboarding stage itself, the way Varun said. So if the onboarding process in the form of video KYCs, in the form of, say, self-sustained or self-reliant portal can be given to them so that they can change their account mandates, relationship mandates, signatory mandates. And then once they get onboarded, there is one more onboarding in the form of the asset. So the sanction process, if that can also be automated. So the tech or the digital technologies can be the AI-driven, can be ML-led, or can be various other form and fashion. But the intent will remain the same from bank as a service provider perspective, how to shorten the time, shorten the TATs, and how to move fast in the overall value chain in terms of delivering the service. So second thing comes is from bank's perspective, what banks have started looking at is not to finance one single entity alone. We should be looking at financing the entire ecosystem, and this is where the supply chain finance as a part of the transaction banking becomes very critical in the entire discussion. And third thing comes in terms of the data, since we were discussing in the previous panel, and yes, data is also equal, I would say, a prominent currency for a bank. Bank sits on tons of data. And if this data can be mined using the technology, and we can start giving the flags or signals to the companies so that they can refine, they can optimize their workflow models. End of the day, what company looks at is how their, let's say, DSOs can be shortened. Their working capital can become more efficient rather than they be relying on the external financing. So this is where the company looks at. I also want to quote one similar anecdote when I was speaking to one of the SME, whom we recently got into a digital supply chain kind of a model. So that particular, now this is the MSME supplier supplying to a corporate anchor. We, through the help of the anchor buyer, we got them onto the tech platform-based supply chain system. For me, it was a product as a bank, but for them, the entire value chain ended up reducing their payment or collection cycle from 45 days to 48 hours. So for them, it was a matter of survival. So the efficient working capital, all in all, the moment I happened to pass it on to the client, whether it is MSME or a corporate. So this is where I feel digitizing the traditional transaction banking plays a critical role for a bank.
Right.
That's it.
Sure. Varun.
If I may just add to what Nitin said, I think the client, whether MSME or, is saying, understand my need, understand my need, and not only understand my need with the data and all, but understand the sensitivity of my request, the time sensitivity, how important it is for me, so that you can come back to me with an appropriate solution in a timely fashion. So I'm sharing data, but please come back to me in time.
And as one of the previous panels said, that don't overwhelm me with the data, right? So, Tarandeep, to you, from a head of trade products, and as we've been hearing that trade digitization is an important area, right? So, I mean, are there emerging trends in the whole trade digitization piece? While Nitin did speak about some emerging trends, but do you want to add on some emerging trends and how are they different? Yeah. Sure. Sorry. Any from a trade perspective, are there emerging trends that are different from what they previously were? Because we all know that trade digitization is an important area now.
Yeah, thanks, Samit, for the question. I'll try to bring in a more global perspective. Not that we're not doing some of this in India or it's not happening in India, but I'll also tell you how it's also relevant to the country. So I see 5-6 big trends emerging for trade and how trade is relevant to our corporates, to their treasurer. One trend clearly we are seeing is how you embed liquidity into the organization. So whether it's a SAP or a Tally or a Zoho Books, how limits itself sit within the ERPs, and corporates would not need to request for finance in the traditional way, but just avail funding on the fly. So that's one trend clearly we are seeing. We've experimented with that globally, even tried that in some way in India as well. The other big trend that is emerging is how do you predict cash flow? Again, leveraging AI. So we have some tools in the market where cash flow forecasting is done in some way or the other. But this will become more and more nuanced, where AI will help you not just orchestrate your cash positions, but also your limit positions, and accordingly then help you to have much better control over your liquidity and over your banking facilities. The third big trend that I see clearly emerging is continuous invoicing and supply chain finance. What do I mean by that? Corporates and especially SMEs will be able to leverage their data by the invoicing that they are doing either through a GST invoicing, etc. How that gets analyzed by the bank, and banks could offer something like dynamic discounting, based on various cash positions, various seasonality, a differential rate, a differential pricing, and again extending liquidity to those corporates on the fly. One big trend we have again tried to play globally, and I think it's going to be more and more relevant, is how risk management can be offered as a service to to corporates. It's a very big differentiation. We as a bank believe there is a use case for that in terms of corporates leveraging the know-how around risk management of banks and actually paying for that service. Now those risks could be vendor risk, those could be AML risk, those could be market risk. So the bank is in the business of writing risk, and how you embed that into the onto the platform and provide that as a service. The next big, I think, piece that is coming on the payment space, and I think trade finance will also leverage, is how do you programmably not just pay but programmably provide trade financing. What would it mean is through tokenization you are able to restrict the end use of that funding that you're providing. So there are use cases you define into the program, and you say that these payments that I'm funding you would only go to certain suppliers, certain industries, certain end users only. So again, I think a lot of people are talking about programmability of or tokenization of the overall currency, and that's again something we are playing in some way globally. The last trend I think is there's no longer going to be a standard product and a standard offering. You will see more and more use cases getting created based on industries. So a e-com industry will have a very different way of lending model that banks will create and assess versus a cement company versus a telecom company. So those kind of differentiated lending models will come out more and more in the space. Again, something we are doing very actively. These 5-6 trends, my belief is some of them are already work in progress. Some of them are could be a bit far because data again is not very easy to manage again between cash platforms and trade platforms, and clients are not very ready in some markets. But I think over the next 5-7 years, this will be a reality, and the whole behavior of, requesting for finance from corporates, I think that will change, and, essentially trade finance would be embedded into the organization.
Sure. Thanks, Tarandeep. Over to you, Indu. Now that you've heard from Taran that a lot of these trends or a lot of these requirements of banks are either work in progress, or I think did he say 5 to 7 years they will be up and live. So, I mean, what technology gaps are still from a technologist perspective are preventing banks delivering this, and what is Nucleus software doing in that regard?
Yeah, morning, Amit, and thank you for having me on this panel. And that's a very pertinent question to a technology and a solution provider. So I just wanted to take the word awesome job. I think Vikram in the previous panel mentioned that banks are doing an awesome job. That is the case. While your question still talks about the gaps and how do we fill those gaps, I would say it's more of opportunities. And the way I see from the 4 decades of experience that Nucleus Software carries on lending and transaction banking, and the way we enable banks within India and overseas. So I would like to spread this across 3 areas. One, the data gaps, or say the opportunities around the data. Second, the connectivity gaps. And the third would be process orchestration gaps. So let me just delve a little deeper on each of this. First, going to the data gaps, and specifically talking about cash and trade here, because your question was very specific to cash and trade space. So when you talk to cash and trade space, so the trade finance depends a lot on data coming from various parties, be it the customer, the corporate, the bank, the local logistic partners, the customs, and so on and so forth. So even today, data is all over, across banks. It's a huge ecosystem. So the unstructured, the fragmented and inconsistent way the data lying across many systems, it's extremely a challenging task for bankers today to put a context to it, organize that, and make sense out of it. So this is what our experience says. So a huge opportunity lies when it comes to organizing that, giving that seamless experience. Because what we have seen is, especially in the trade space, we still have documents lying in all shapes and forms, be it PDF, emails, those Swift MTs, and so on and so forth. So this is also largely because of the slow adoption of maybe ISO 20022 across the corridors. So this is one. The second area that I would want to focus is the connectivity challenges. We have come a long way when it comes to automation and digitization, right? The ecosystem, there are multiple systems within the bank's ecosystem. And when you also consider the corporates or the customers of transaction banking, then the ecosystem becomes even larger there. So are we still there when it comes to a seamless integration between all of these systems? Maybe it'll take some more time to reach at that stage. Why we as technology partners, why I am making this statement is, we have a lot of observations working with international banks and domestic banks in India especially. So what do? We have still seen that there is a lot of dependency on those batch file kind of dependent processing, proprietary formats, very isolated host-to-host connectivity for that matter, and say kind of limited AI adoption. So putting an AI-first approach there can certainly help in bridging those gaps, and that's a huge opportunity for banks as well as the technology solution providers. And the last and the third point, which is very important again, is all about the process orchestration. So when I say process orchestration, specifically in the context of trade and cash, when I say, definitely there is a payment real-time settlement system, and also there is a trade finance system. So do these systems coexist in an absolute seamless manner? Maybe there is still some time to reach at that stage. Okay, so so these are opportunities that we still see, and some amount of gaps still persist, and tie them all to tie those gaps together are really opportunities for banks as well as the technology providers. So this is how I see, and these are posing challenges for the banks to offer that seamless and straight-through processing experience to the ultimate customers.
And is Nucleus doing any of this to bring it
Absolutely,
live for
Amit.
the banks?
Yeah, absolutely, Amit. There is an immense focus, especially when it comes to Gen AI, in our offerings, especially in the transaction banking and lending space. In days to come, you would be seeing that a lot of use cases, because over the period of time, a lot of use cases have, we cannot wait for industry to come back with the use cases, because we know our system better. There are a lot of use cases that we have ourselves identified, which can be a lot of value add to the customer, because in the transaction banking space, now the change is that in the past, it was only meant for corporate customers, but that's not the case anymore. If you look at the banks where we have also implemented our systems, very beautifully banks have offered it across segments, right from sole proprietorship, MSMEs, SMEs, and the large conglomerates.
Sure.
So a lot of opportunities there, and we're coming up with technological innovations there.
Thanks, Indu. While we do have time, and I have another question for our panelists, but are there any questions from the audience which the audience have? Otherwise, I can then pose my question to the panelists. Any questions? Okay. I think this is a common question now to all my panelists, right? We've obviously spoken about upcoming trends, the requirements of banks. Again, Varun, starting with you, where do you see is the greatest untapped opportunity, within the whole transaction banking space?
I think the answer to that is fairly simple, and I think Ram, in his first slide, showed it. It's the SME space. Okay, in India, SME as a sector contributing to GDP is bound to grow. Transaction banking has historically been focused on solutions for large corporates. Over the years, moved to mid-markets. It has not percolated down to SME. So SME clearly is the next focus area. It blends in well with what Taran said in terms of banks looking at ecosystem, supply chain, and the deeper you go, the more SMEs you encounter and the more efficiencies that you can bring in.
Right. Thanks, Nitin.
So, again, before I put my thoughts to it, I also want to repeat something which Mr. Anand and Mr. Vikram also have kind of mentioned in their discussion. Banks should not forget the core business, the core agenda, and so that the trust and the money which is lying in the balance in the account remains intact, remains safe. So from that perspective, what I feel is that changing the business model using the technology as well as the partnership is the greatest area of opportunity for banks in today's time. So see, technology, now the thought behind it is that technology is essential, whether it is in the form of UPI rails or real-time payment rails, APIs, AI pilots. It is essential, but then it is not sufficient alone. So we also have to get into the partnerships coupled with the change in the overall business model. Like Taran said, nowadays, whether it is a SME or a corporate, they don't look banker as a traditional, transactional service provider. They want us to participate to support them in their growth. So we, like Taran said, we have to start the banking right from their ERPs, where the actual business is starting. So for corporates, we have to go deep dive, become a partner in their ERP itself. For SMEs, we have to solve the complicated paperwork because they do not have the time and the money to get into IT vendor kind of enrollment. So to sum it up, business model revamp, looking the end consumer in mind, whether it is SME or corporate, is the greatest opportunity in transaction banking for banks.
Got it. Thank you. Taran, from your perspective?
Yeah, I'll borrow from Indu a word. But yeah, I think cash orchestration is the biggest opportunity, as Indu alluded to. How do you, get the cash systems and trade systems integrated, how are you able to look at, the cash flow positions, not just from a collection payment perspective, but also from your invoicing perspective, how you're invoicing, how you're giving a consolidating view across banks. How are you essentially becoming the liquidity brain for the treasurer, and you're able to provide that in a single frame. I think that's going to be the biggest next thing or the opportunity for banks to deliver to corporates.
Thank you, Taran. Aman?
I think the biggest opportunity which is there, which is still to be tapped, is the customer service. I think customer service is something which we tend to take it for granted. We, as Sanjeev mentioned, if you do a proper TAT assessment, it'll be far worse than what we actually project, right? So, and we try and avoid that. You talk to any operations guy, and talk to any business guy, says, boss, let it be. We will mention 4 hours, but it doesn't never happen in 4 hours. When does the 4 hours start? We don't know, right? So I think the customer service is one aspect which has huge potential. And if you do that, you'll get everything right. I think in the first panel, I think Viraji mentioned about customer life cycle value, right? So that is where you get it. He will continue to transact with you regularly, more effectively, and he will not look at any other bank if you keep it simple and you give him the customer service consistently. Don't have to give him a wow service every time. Give him a consistent service. He knows what I'm going to get. This is what I expect and this is what I'm going to get. I think you are done with. I think that is a very important aspect that we need to look at.
So from SME to partnerships to cash orchestration to customer service. Indu, would you have anything as a fifth point?
So, Amit, the way I would like to look at it is, I would not really want to attribute this to one single area or say one single opportunity. To me, these three areas complement each other, okay? So be it technology, be it partnership, or be it the business model innovation. So since there is a direct question to me, if I were to pick one, I would go for business process innovation there. Reason being, as I said earlier also, and I think Nitin also just mentioned, it is not just about offering the transaction banking to one segment now. So complementing all these 3 areas together, connecting these areas together can create an intelligent and an embedded transaction banking. Because customers today are not really expecting or looking bank as a separate entity. They want this to be embedded as part of their business workflow in itself. So no more digitization is focused just on the bank. It is not bank-centric anymore. It is a complete ecosystem-centric at the moment. So technology can complement, let's say, Gen AI talking about an automation around liquidity, let's say your blockchain focusing about the third-party verification, so on and so forth. So all these 3 areas complement each other, and we cannot work in isolation. When it comes to partnership, bank and the technology solution providers will have to partner. They have to learn from each other. It is not a single entity's job to achieve this, what you just mentioned.
So it's a complete business model innovation with some opportunities around SME, partnerships, cash orchestration, and customer service. So I think with this, if there are any questions for the panelists, I think we can also take them later. With this, I would like to thank my panelists for their time and for their insights. And thank you once again. Thank you so much.
Thank you so much.
Thank you.